To bring in Charlie Beckham. He's partner at Haynes Boone in Houston. Charlie, your firm has done an incredible job highlighting all of the bankruptcies, with nearly 200 since the beginning of 2015. Are we almost through this bankruptcy cycle in the distressed oil and gas patch?
We are not.
Okay. So how much further do we have to go?
In 2015, when all this started, those in the bankruptcy industry thought that this could take a couple of years. And going into 2018, I thought we were in the late innings of the downturn in the bankruptcies in the E&P industry. Now, with turning the corner into 2019, I think we are actually in the second game of a double header in the early innings.
Wait, this is a huge prediction, Charlie. In other words, so far we've seen nearly $70 billion of debt involved in bankruptcies since the beginning of 2015. What do you think that the total volume could be by the time this is through?
You know, the number is actually, in our statistics, a little over 108 billion, and that was through September of this year. I would say that in 2019, we've seen another 15 billion go into bankruptcy, debt at risk. I think that those numbers will increase through the end of the year. We know that there are a handful of other large companies that are on the edge. So you could see, I don't know that you're going to see the numbers double, because I'm not sure there's enough debt out there at risk in the E&P companies left, but you could easily see another $25 to $50 billion at risk over the next 2 years. So,
Charlie, what do you think recoveries will be like?
Depends. When you look at a bankruptcy for an E&P company, think of it as a three-layer cake. The top layer is generally senior secured lenders who have not seen much distress or impairment in the bankruptcies through 2018. Then you have junior debt and equity at the bottom. For the most part, in almost all of the bankruptcies we've seen since 2015, equity has been wiped out. The middle layer of debt, which is junior bond debt and such as that, has converted debt to equity. And I would say probably 2/3 of that has been a debt for equity conversion, waiting to hold on until 2019, when everyone thought commodity prices would increase. Hasn't happened. And in 2019, we are seeing significant differences and impairment in that first lien debt, which I think is frightening to many of the commercial banks.